All right, from stocks flashing caution signs to quality names taken to the woodshed recently, well, we've got your edge now. Joining us, Bob Pavlik, Chief Investment Officer at Oak Tree Asset Management. He's with us at the big board in Toledo, Ohio. Alan Lancz, President of Allen B. Lancz and Associates, editor of the Lancz Letter. Pleasure to have both of you with us. Alan, let me begin with you. Last week, you bought Goldman Sachs, JP Morgan, Wells Fargo, and GE. Talk about buying some stocks that have been absolutely clobbered, can we say? Any kind of word you'd want to use. What makes you think now's the right time?
Well, just purely on valuation, where a year ago, I think you were taking a lot of risk and you weren't getting rewarded for it, Aaron. I think now, as of late last week into that panic selling, there were just some tremendous opportunities. Not to say, it's a bottom or, no one knows, but I just think at those levels that you're getting an attractive yield, you're getting, valuations you haven't seen in years, and this is the upper echelon, the cream of the crop. And I think you want to buy quality when everything's gone down like it has.
Bob Pavlik, when you look overseas, everyone's starting to say, well, things are going to get even worse there, right, than they are here. And certainly we've seen it. I mean, traveling, I see it. But India today, granted, growth numbers are backward looking, but it came in at 7.6%. That's hardly coming off a cliff, and we need India and China.
Not at all, but you're still probably going to see a continuation of the slowing overseas. I've heard other people say what Alan just said, and I can't fault them for buying those high-quality names. But the problem with that I have with valuations here is that I can't trust analyst estimates. I mean, you take a look at the estimates. Bob Pisani's been writing about it in his blog all the time, that analyst estimates are still too high. So how can you value a stock? A stock comes down from 30 to 10. It doesn't make it more valuable, or it doesn't show more valuation. It just tells you that the stock costs less. And so basically I've been holding back and not doing very much. I've been writing some covered calls, trying to take some profits, trying to lighten up on some areas that I don't want to hold going into, a continuation of the weakening economy. I think there's going to be plenty of opportunity. The negative news is going to continue to be out there. Right now, we're in a bear market rally. It's terrific that we're up 20%. I'd love for it to continue, but I think we're going to end up bouncing against resistance levels. I think if we can get above 907 on the S&P 500, and then maybe we have a chance of getting it to 1,005 on the S&P, but I really don't see it going much higher than that until the end of the second quarter of next year.
Let's bring Alan back in if we can. Aside from needing a winter coat for Christmas, it looks like, what would you, what do you think about this bid that we're getting, or we've had so far, for the more risky groups, if you will, and away from the defensive names? Is that sustainable? Is that a trade that you would look at?
No, I mean, Bob might be right in that, this is a rally in a bear market. But, I mean, the rallies are, it might be a 20% rally, but with the JP Morgans and the Wells Fargo just from last week, it's a 40 to 50% rally. And I'm not saying we're going to hold them forever. I'm just saying, at the end of last month, we had a good rally up to Election Day, the first week of November. And if we have a rally into next week, I think it's a situation where you can take some money off the table, take some profits. Last month we sold some Wells Fargo at 37, and if we can buy it at 2021, again, we're not saying it's a bottom, we're just saying it's starting to show value. And if there's more bad news and more panic selling, we'll be in there to buy it at a lower price even than that.
I mean, Bob, if you had to, just